Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, and we are now on April 26, 2017, about 2:15 p.m. Central Daylight Time. All right, my friends, I read the comments that I get, be it on YouTube or on other blog sites. I don't spend my day doing it, but it's interesting. And it was amazing how some people are saying, gee, Ira's getting bullish down here on gold. How can he be? Well, one of the reasons that I'm thinking gold is trying to make a bottom here is that 200-day moving average of closes. I'll give you another number. In the silver market, I have been saying if the market lets go and dropped under the Bollinger Band, you might get down in that market as a technician, and that's what I'm talking about. I'm not saying I'm predicting these. These are technical points on a chart. To the 1745-47 level, which it's been oscillating as the 100-day moving average. Both are in those zones right now, so that's important. We saw the president's tax plan. It was a yawn, and you know, you're not getting so far the reaction of buy the rumor that we've had a two-day big rally going into today and sell the fact, which I find interesting. The dollar has held up relatively well also. Now, remember what the tax plan was. Take a brush and you're just going like this and you're painting. None of the details, so we're not looking to see how well you're painting on that board. Can I see your strokes? What's going on? That's all about to come. Will this ever get passed? Who the heck knows? And I say that for one reason. As much as everybody in Congress, I think, would like to put money back in people's pockets, how do you do it becomes the first thing. Is it really going to be? We know it's not a neutral plan. In other words, it's static. And I watched them talk about that on CNBC and Bloomberg today. Static means it pays for itself right away. A dynamic plan is very different. You're going to say, down the road, the market is going to do this, and those will bring in the dollars. We'll see if that all works. I, for one, want to see a new tax plan. Now, let's look at the gold on a weekly chart. Is there any doubt that the market had been in an uptrend and it's now correcting? I hope you're not going to say no to that, because you've come from under 1150 up to 1294. You're getting a correction. My theory is that markets that correct, you look to see how deep they can correct. I'm not putting the slow stochastic on here for momentum. One potential number might be 1228. But now we can go to the daily charts to see if we come up with more info. When we go to the June gold daily area chart of closes, you've gone down. You've gone from 1294.10 down here into the 1268 number. Today you're up at 1268.90 and the settlement's around this level. So let's assume yesterday was in the 1266s. Okay, so the market's trying to hold itself in that 1266 level. It did get down to 1260.70, but the settlement prices are coming in there. When we look at the chart, you see how the market reached down and gave itself a bounce up on a daily bar chart. On the swing line chart, the pattern has been one that is broken. We had a bull trend when we had higher lows and for a while higher highs. And then all of a sudden the break here took you under that low. So now what you've got is a higher high and a lower low. That is not a trend. A trend, be it a downtrend of lower highs, plural, lower lows, plural, or uptrend, higher lows, higher highs, that's not what this is. This is a pattern where you're going somewhat sideways in a correction, looking to see how deep that correction will go. The reason that some of you are saying I'm getting friendly, and there's no question I am, is because I'm looking at the 200-day moving average of closes. And this market has worked hard to get up to it, but it's not breaking away from it all that easy. Now, I'll throw in the towel if the market starts down back here and say, hey, maybe next time. But right now, I'm looking for, on rallies, and I think I said this already, that the market fights a battle between the 200 and the 18-day average of closes. And it seems to me, darn it, it's pretty close to doing what I was saying there. Next, I'm looking to see, is there resistance and momentum anywhere? Resistance and support's the right word. The resistance would be the black Bollinger Band, the bottom, the supportive one. Nah, we're nowhere near either of them right now. Momentum-wise, the market is no longer overbought. It has worked itself out. The readings are now both numbers under 70, but they are still pointing down. Therefore, if you believe that momentum leads price, you still have the market fighting a battle to get out of a downtrend, and momentum is pointing down with resistance at 1270.70. That's the way that I'm looking at the market right now. Certainly not saying, hey, this has turned into a buying market. That's not what you're hearing from me. The ratio of gold to silver, you need now 72.5 ounces of silver to buy an ounce of gold. You were just recently 68.25. So silver's obviously weaker than gold since you need more of it to buy it. Hey, folks, I got my ETFs back. Our vendor, 20 minutes ago, they got these working for us again, so I'm more than pleased. So let's first look at the gold ETF. The trend, unlike the futures, is down. Lower highs, lower lows, but darn it, look at this 200-day moving average of closes and the 18, and they're doing the same thing as the futures in a downtrend. Resistance at 120.81. It's got work to do if it's going to be good, but it got its legs under it. Let's look at GDX, the miners. This market came all the way down to the lower Bollinger Band, and that's where it's trying to find itself. Now, it's oversold as can be. It's in a downtrend. The 100-day average will be the first resistance at 22.70. Now, one of the things that I try to teach is that the 100-day average is often similar in its respect to how it acts as the 200, but the markets stay above or below it a little longer. And in this case, when it got under it, it took a while for it to come back to it, but it is a good number to look at in that sense. So now that you're under it, is it going to try to pop right back over it? Is there going to develop more time there? And obviously, if the miners are down, well, you're probably going to keep the futures down and the ETF. Silver market. As this market was breaking, I have been here saying that because you got under the Bollinger Bands and they're not acting as the support, it might want to find support against the 100-day average. And darn it, one day doesn't make anybody a hero, but it did a heck of a job of getting to that number, and it's trying to find its support. Now, it's a very oversold market, nowhere near converting that into a locked-in downtrend, and it's gone from a good number up here. It's gone down about $1.30, $1.40. We'll see. There's no reason to get bullish, so please don't put words in my mouth. But there's also a reason not to be bearish down here at this point. That I will say. What about the ETF? Same thing. You got down to the 100-day, you're oversold. Again, no reason to get bullish, but this is a support number. Yeah, you got under it a little here, but then you threw yourself back up. Let's see how this acts. Is the market trying to convert to more bullishness, or was this it and the market's just going to give up in the gold and the silver? That's what we're going to find out. In the copper, all you did is rally back to the 18-day average resistance. To negate the downtrend, and this is in a downtrend, you've got to just tick over 262.50 and negate it. Now, I would say that there's formidable resistance at 264.40 waiting for the market. But I think the pros here are probably nibbling on the short side, and if it gets over that number, wouldn't be surprised if they just bail. The platinum-palladium trades have flipped around. Platinum is still weak. Lower highs, lower lows under the 18-day average bearish. If it wants to go down to further support level, you know what I'm going to tell you. It's probably the 941, the lower Bollinger Band, and given you're not oversold, it can easily make that run. Doesn't have to, but it could. The flip has happened that the palladium threw out buy signals today. The market now has higher lows, higher highs. Therefore, the bulls are in play until the market does two things. Either get back under the 788.50, which is what would negate the uptrend. I think they'll find support at 796.50, so that $8 move area is where I think the market is going to look at. If it can go up further, anything near this upper Bollinger Band of 816 could be where the market wants to make a run. In the dollar index, you had 2 days under the lower Bollinger Band. What I teach is that staying above or below a Bollinger Band more than 5% of the time doesn't occur. How do you know what that 5% is? I developed a method to count days where you settle under it in successive days, under or over, and subtract percentage points from it. So you had about a 3% chance today, coming into today, of staying under that number, because 2 days in a row were under 2 out of the 5 percentage points. I count each day as a percentage point as a rule of thumb. All you did is get to the right-hand side. It's not a trend changer. It's a market that lost some of its momentum down there, and now the question is being oversold. What does it do from that point? Well, we cover a lot of this, and we cover it in our Charts of the Day. Charts of the Day is a free subscription service to you. And what it does is, today we did cattle as an example. Earlier in the week we did silvers. I mean, there's different ones we do at different times. And how it works is we're looking at the combination. Think of it this way. A Fibonacci married a swing line. So you get a chart pattern. The market's going up, starts wiggling back and forth, doesn't make a new high, and starts breaking down. Where might that carry the market? Market gets an up move, sets back. Where might the counts carry it to the upside? We label them as retracements and so on for you to get a feel. We teach this all to you if you want to learn it that way as well in PDFs that we send out. How do you get all this? Well, it's really simple. Call us at 866-973-2077. We'll put you on the list so you get these each day, and we'd be happy to put you on our charting software if you want to try it out yourself. That includes all this so you can do it with videos and all to teach you how to do this. Or you can also go right under us. You're going to see, you can click, it says click here. You can go to our website as well. You'll see a carousel of free offers. Or you can click right up here. If you see us on YouTube, there'll be an icon there. Click on it, fill out the form. I'm Ira. You have yourself a great day, and I'll see you all tomorrow.